Although the Dow traded down today, note that it did so with an indecisive trading day, kind of a spinning top. The warning was that it was trading below the T line. Now, if you just analyze the Dow in its own self, that would be a little bit nerve-wracking or telling you the sellers might be taking control. But remember, the whole market is made up of three major indexes: the Dow, the Nasdaq, and the S&P 500. As can be seen in the Nasdaq, it opened lower, but immediately started trading higher and closed flat on the day. Now, although that wasn't a powerful day as far as the Nasdaq moving, it pretty much told us that there was not any major consensus of selling, that there was buying after the open. And although the S&P 500 traded lower today, it pretty much used the T-line as a support level and also traded indecisively, doing a doji day. When you add all three of those analyses together, it pretty much kind of tells us there was not any major change of investor sentiment, that the trend is still in progress. Add the fact that Amazon opened lower right on the T-line and traded positive. No indication of any mass selling or any overall selling in the market in this stock. Tesla traded up over 50 points today. No signs of selling there. And Netflix continued its uptrend. So although they may be bullish charts if you were trading them, they also illustrated the fact that if there was a major selling consensus in the market, the big stocks would not be trading positive. When the big name stocks are trading positive, that means there's still lots of bullish sentiment still remaining in this market trend. And patterns like the fry pan bottom are evident in our recommendations, such as in Rite Aid. You can see the fry pan bottom and how it's supported on the 50. And remember, coming out of a fry pan bottom, we've got big upside potential. Our recommendation on ITCI, same scenario. You can see the fry pan bottom, stochastics coming up, supported right here at the 50, back up above the T-line with kind of a doji sandwich, implying there's more upside. First target is probably filling the gap, still a good percentage move away. And Reggie was recommended because it was doing a fry pan bottom, climbing right up into where the fry pan bottom started, meaning if they break out through here, that's where the prospects of big price moves take place. And using what we call 2+2 analysis, meaning when we can start adding factors together to improve the probabilities that we're in a right trade at the right time, you can see the fry pan bottom on ZS with a doji right smack dab at the breakout level on the 200. And our simple doji rule, that if it moved or traded positive, or if it opened positive, it was going to trade positive. And if it traded positive, it was probably going to do the same magnitude candle as this, giving us a bullish doji sandwich, which would imply very quickly two things. One, that they weren't resisting at the 200 anymore, and two, that the fry pan bottom breakout was in progress. When you can start adding all that information based upon what continually reoccurs in human nature, you're essentially learning what moves prices, which is basically human nature. Remember what Tesla did a couple weeks ago. There was your parabolic move. And what gave us the inclination to start taking profits up here on flipping to the 10-minute chart? The fact that you'd move that far away from the T-line. And we had that same scenario on our position in SPCE, where it did a kind of a fry pan bottom breakout with a doji sandwich. But what told us to start looking to take profits up here? The fact that you were that far away from the T line. So what's the process when you can visually see you're that far away from the T line? Simple candlestick analysis. Nice move up, big profits, starting to sell off. Then come back down through the T line. There's where you might start taking profits. Why? Because the 10-minute chart is telling us they're starting to sell, and we already knew that we were way too far away from the T line on the daily chart. This becomes an excellent place to start taking your profits because of those factors. Visually identifying candlestick signals and patterns that we know have high probability results allows us to get into positions with a much higher degree of probability we're going to make money. Look what happened after Tesla did the big blow off. It went sideways for a while. When was it time to see, or when was it time when we could tell that the bulls are taking control again? Look at our bullish left-right combo, one of our strongest top-ranked signals. That's when the buying started coming back in. After making good profits in Luck and Coffee, shooting star after a gap up, close down, start taking profits. When was it time to start buying? Well, look what happened today. Another left-right combo after a series of dojis with stochastics coming up, producing a good probability that there's going to be more upside after that left-right combo. Because human nature works the same way time after time, creating the same signals, and we can identify which of those signals are the strongest, it puts us in situations where the probabilities of being in the right trade at the right time is constantly in our favor. That'll be it. We'll see you in the chat rooms.